You're watching Sky News Money.
The information featured in this program is general in nature and therefore should not be relied upon. Guests appearing on the program may have commercial arrangements with some of the companies mentioned. Before making any investment, insurance or financial planning decisions, you should consult a licensed professional who can advise whether your decision is appropriate for you. Now, Small Business Tuesday continues with Your Money, Your Call.
The Reserve Bank dropped interest rates by another 0.25% today to a new historic low of 1.5%. However, the share market had fully anticipated the move and ended up down 48 points, almost a full 1% drop for the day. After starting to recover from a sloppy start at the start of the trading session after the RBA announcement, the market promptly dropped at 3 p.m. when the Commonwealth Bank stated they would only be passing on about half of the interest rate cut to their customers. And that was followed by the other banks, which cut between 10 basis points and 14 rather than the full 25. At the same time, the banks raised their deposit rates, causing investors to worry about margin pressure for the banks looking ahead. Sealing the bad day's trading was the energy sector, down over 3%, material sector down 1.2% after a weak overnight read for commodities. Good evening and welcome to Your Money, Your Call. I'm Ken Bloomfield from Financial Clarity. If you have a question about shares, our phone lines are open on 1300 30 34 35, or if you prefer, you can email us on yourmoney@skynews.com.au. Joining me on the panel tonight is Andrew Page from the Motley Fool and Carl Capolingua from Investor Systems. Welcome, gentlemen.
G'day, Ken.
Here on a big night. It's always good to be here on a Reserve Bank night, isn't it? So, Carl, what do you think about today and the reaction by the market there?
Look, I think today is just another example of how crazy markets are starting to get. I mean, I've been doing this for over 2 decades, and I don't recall a time, unless you can remind me, where the banks, after an RBA cut, banks cut rates on mortgages and increase rates on deposits. I can't recall when that happened. It's almost a bizarre world sort of scenario. So it's an example of, you would have heard this term dislocations that are occurring in the markets, not just here but all around the world. And these sorts of things don't fill me with overwhelming confidence about where the global economy is going. You're not cutting rates to record lows because things are fantastic at the moment. That's certainly not the reason why rates are very low around the world. I think the impact of low rates has been shown. I think history is beginning to show quite clearly that the positive effects are limited and are becoming more limited as time goes by. So something's got to change pretty soon. The question will be how markets deal with that. I know I'm setting up more questions than I'm answering at this point.
You're supposed to be here to answer the questions.
Well,
but no one's asked them yet, I guess, so that's all right.
Well, maybe we'll get to some questions and we'll answer a few.
Yeah. No, look, it is interesting, isn't it? Now, we've got our first caller. We've got Luke on the line. Luke, how can we help you tonight?
Good evening, panel. I'd like your opinion on a couple of stocks that we've held for about 12 months. First one's Vita Group, VTG, and the second one's Hansen Technologies, HSN. They've had a pretty good run of late, and just wondering whether it's time to take some money off the table or just let them ride. Thanks.
Okay. Good, thanks, Luke. And Carl, what do you think for a technical perspective as well?
Yeah, look, I don't like agreeing with Andrew. I tried. We do our best.
Few people do.
we do our best not to agree generally when we're on the show. But,
well, it makes for better TV.
It does. Yeah, unfortunately, I absolutely agree with him. They are both brilliant businesses. The businesses we've followed for a long time. They've been in just wonderful trends, and they're only in those trends because each of them have double-digit earning growth, reasonably priced, reasonable forward PEs. They both pay healthy dividends. So yeah, they just tick so many boxes. And when you get that situation where there are few alternatives, I mean, we're not in a rampaging bull market here, there seems to be, you tend to get a lot of crowding in these quality stocks. So you get charts like out here, but there's nothing in these charts from a technical perspective to tell me that the momentum is waning on either of those. So definitely happy to hold at this stage. If you're a buyer, look, I think you try and buy dips. You don't get many dips on these, but I think you try and buy the dips on these if you're not in the stock, but definitely holding. These are definitely the type of bread and butter stocks we go for. We're not so big on sort of the top 20 or top 50 or so. We're more mid-cap stock pickers, and I don't know if you've noticed, but we've got a bull market by stealth in the mid-cap stocks, just punching up to 6,000 there, and the highest it's been since 2008. So you've got the broader ASX 200 nowhere near its highs from 2007, yet we've got the mid-caps punching through. So that tells you a lot about the current state of the market. It's a stock pickers market. It's not a bull market where you just buy anything and it goes well. So you definitely need the expertise to get out there and find stocks just like Hansen and Vita Group.
Fantastic. Well, Luke, there you go. We'll move on to our next caller. We've got Nancy. Nancy is calling to ask about a stalwart of the market. Nancy, how can we help you?
Yes.
Nancy, are you there?
Yeah, I'm here. I'd like to speak about Sydney Airport.
Yes.
And Woolworths.
Sydney Airports
Please.
and Woolworths. Okay. Fantastic. Thank you, Nancy. Carl, I'll come back to you first on both these stocks. I mean, Sydney's been such a fantastic stock, and no real surprises for that, given the Aussie dollar going down and tourism sort of taking over so well. But where do you sit now with Sydney?
Look, I still like it. The momentum on the stock is very good. For the viewers maybe that haven't seen me before, I'm more of a technical analyst, I guess, than the fundamentals. Probably a 75-25 sort of split between technicals first and fundamentals second. The way I like to look at it is there's a lot of stocks out there, so I like to run my technical scans over the market. Yep. It reduces the 2,500 down to maybe 20 or 30 that then I go and have a closer look at the fundamentals on. I haven't researched the fundamentals on either of these stocks because they haven't been high up on the list, high up enough on the list for me to do so. So I'll simply comment on the technicals on each. Sydney Airport certainly looks the better of the two. What's interesting about these two particular stocks is that they're both probably considered to be defensive stocks, yet they've had very different outcomes over the last couple of years. So I think it's a good example for viewers in that you can't just say, oh, look, I'm going to play defence. And all defensive stocks are going to be the same there because they can be very different. Sydney, no reason to sell that at this point in time. Definitely I want to be a holder of that stock. Happy to buy it, I guess, also on the dips, probably back around that $7 mark. In terms of Woolworths, look, I haven't had to do research on Woolworths for many years now because it just hasn't been coming up on the filters. There is maybe a 10 to 15% chance, based upon the models here, that we have seen the worst of it. So there's an outside possibility that the bulk of the selling is behind us, and we may see some bottom fishing, some accumulation rather than distribution at this stage. It's a little bit too early to tell. I'd be more interested if I saw it maybe pull back a little bit to 22 and then see a nice rise again through those recent highs around 24, and that gives you the classic higher peaks and higher troughs, and only then could I start to do a little bit more research on it. So happy to hold Sydney or buy Sydney, but not ready yet to wade into Woolworths.
Okay, good. We are now going to move on to our next caller. Our next caller is Mario. Mario, how can we help you tonight?
Hello. I'd just like to know if you think there's value in the following two stocks, Aconex and Vocus Communications.
Okay, ACX, Aconex, and Vocus, VOC. Carl, would you like to make a comment on either of those stocks?
Yeah, sure. I'll start with ACX. From a purely technical perspective, it's not one that I've been tracking, which is a shame. It actually looks quite good, so it's one that I regret hasn't come up on the scan for whatever reason. It's had a little bit of a pullback recently, though, just nullifying some of the momentum it's had of recent times. So, for 350 to 850 since February, which is a fantastic run if you've had it. Since then, I guess in the last couple of weeks, it's lost significant relative strength, we call it. Now, that is not relative strength, the RSI, which is one of those classic technical indicators. It's the relative strength comparative. So one of the key things I look for is how the stock is performing against the broader market. And the reason for that is I'm looking for what fund flows are doing. So stocks that are outperforming are obviously getting more of the fund flows than stocks that are underperforming. And, funds, especially here in Australia, tend to switch and, flip and flop. So
that's interesting you use that indicator because it's one that used to be used a long time ago by a lot of technical analysts many, many years ago. But I haven't heard recently of anyone using that.
I think the first that I know that it was mentioned in a freely available, I guess, publication was Stan Weinstein's The Secrets of Profiting in Bull and Bear Markets. In 1988, that was published. And if you are a technical analyst, if you cut and you bleed and the colour of the blood is technical analysis, then you absolutely 100% need to read that book. That is
it's a great book, isn't it?
100% my favourite book on technical analysis, and
it's the only book I've read on technical analysis.
Really, you know what? It's the only book I think you need to read, and he never wrote a sequel to that book. A lot of other authors of that time cashed in on some of their first book fame, but he didn't.
Just look for the man with the big buffy 80s
an amazing haircut. And he was asked, Stan, why did you not write a sequel to that book? Why did you cash in? He said, look, I put everything in the first book.
Yeah.
And I think he did. And definitely forms the basis of what I do. I've added a few extra things to it. But look, relative strength is important. If a stock is underperforming the market, it is not getting cheaper and cheaper. And in my opinion, it is becoming more and more dangerous because the funds are moving out of it and buying other things. So, look, I'll cut a long story short here and say that that's not my favourite pick right now. I think it's a great trend. I think if you're with it, stay with it. If you're not with it, then I think there might be a better buying opportunity a little bit down the track. On Vocus, very quickly, because I've taken up a bit of time here, look, I think it's time maybe to take some profits on Vocus. I know it's a brave thing to say because it is and has been such a great performer and it is a great company. But just looking at the momentum here, and again, that relative strength, the momentum is coming out of the stock, so I think it's time to get some money off the table there and seek other opportunities that are on the cusp of improving their relative strength.
Okay, good. Thanks, Carl. Straight to our next caller. James, thanks for waiting on the line there for a while we were chatting away. How can we help you tonight?
Thank you for taking my call, gentlemen.
Pleasure.
I would like to know your views on what's going to happen to the share market in the near to medium term, and in particular, what's going to happen to A2 milk in the medium term.
Okay,
thank you.
Good, James. Thank you.
Thank you.
What's your feeling as a technical analyst now with the market generally, Carl?
Look, the market is in a short to medium-term uptrend. We've seen those high peaks, high troughs on the ASX 200, but it's a very diverse market. So the ASX 200 is underperforming, say, the mid-caps and even the small caps as well. You've got pockets of strength in healthcare, absolutely amazing run there, obviously led by CSL Cochlear. You've had good performance in industrials, consumer discretionary, and then you've had poor performances in financial services and energy as well. So you can't just throw a blanket over it and say, what's the market going to do? It's a bit of a loaded question. The market's going to do what it's going to do is always the answer I give to that question, but there are going to be places that you want to be and places that you don't want to be. I can't see, incidentally, in the areas that I mentioned that are doing well, I can't see anything really in the technicals to tell me that those strong performances are going to change. So I don't think energy is going to all of a sudden be fantastic, nor will financials, but I think some of those other better sectors should maintain their trends. Having said all that, it's hard for me to get really enthusiastic and totally bullish, and I'm dyed in the wool bull. I've always been like to play the market from the bull side, and it's hard for me to get too bullish given what's going on a sort of a global macroeconomic view. I've got more concerns out there than I do have, I guess, things that are making me excited. So I think it's one where I like a high weighting in cash at the moment. But the cash you are applying to the market, again, it's not an ETF type of play. I don't think that's a wise way to go. I think you've got to go and pick stocks, and whether your methodology is value investing like Andrew, or it's technical trading like mine, you've got to have a methodology to do it, because I think if you don't, this market is going to chew you up and spit you out.
And it's such a volatile market too, isn't it? I mean, really, if we go back in the market for the last couple of years, there's been no meaningful trend at all.
No, it's been
chopping all over the place, and a lot of it is because we've been getting our cues from overseas. coming out of the mining boom. And it can make a massive difference, being in the right sectors.
I'll just say one thing, and I'll let you go to Andrew, but look, the money's still coming in. So, we've still got 9% of everybody's income goes into superannuation, 40% odd goes into the share market. So the money's still got to go in. It's got to go somewhere, but the active managers will be very careful with where they place it. You get that crowding and it still gives you some great trends. So I'm not saying you don't want to be in the market, you do want to be in the market, but you've got to be very selective.
Andrew,
I'd agree with that.
Anyway, we'll move on to Joe. Joe is calling from Sydney. Joe, how can we help you this evening? Hello, Joe, you there?
Yes, I am.
Oh, good. How can we help you this evening, Joe?
Yeah, hi guys. Thanks for taking my call.
Pleasure.
It's just in regards to looking at a company called Silver Lake, SLR.
Yes, Silver Lake Resources, yep.
And the other one is Brambles.
Brambles, okay. Two very different stocks there, Joe, but we'll have a go at them for you. Thank you very much. So what do you think, Carl, about both of these two? I mean, you're coming at it from a slightly different perspective, I guess, with the technicals on Silver Lake.
Yep. Yeah, look, I love a great chart, and Silver Lake's got a great chart, but I also like a great business, and Silver Lake's not a great business. Earnings are sporadic at best.
So if you're wanting quality gold companies, there's probably a lot of other.
And there are. And look, I've been plugging gold stocks for well over a year in the show. None of those which I've plugged at this point I would be getting into at this stage. I think they've all had a tremendous run and probably ahead of what maybe they're worth a little bit. I've got a new one.
Right.
If you're interested.
Okay.
MOY, which is Millennium.
Okay.
And that is one of the rare small gold companies out there that is actually making some money. It has some good cash flows, great margins, is well run, and is 30 cents. So
where are their mines?
They're producing Nulla. Don't make me.
Nulla.
Yeah, it's in WA.
Whatever. WA, something. Okay.
But that would definitely be my pick in the gold sector, and it's a great chart and great company behind it. So either that or Metals X is another one I'm looking at the moment. So I think if you want to go into that mining space, in that speculative space, you can do a lot better than the ones that have already been pumped on hot copper. You need to get out there and do some research, and there are some good companies out there that they haven't run yet.
Excellent. Thank you, gentlemen. We'll move on to our next caller. We've got Victor, and Victor is calling from Melbourne. Victor, how can we help you this evening? Hello, Victor.
Yes, my question is NEC and...
NEC? Yeah. Yes.
And... And Medibank Private, please. It's a good time to buy or not.
Okay, good. Yeah, thanks for your question. What do you think, Carl, about 9?
9 is a total basket case.
Total basket case. There
Absolutely.
you go. Thank you very much.
You want to avoid.
So avoid that one, I think, Victor.
Yeah, look, I forgot to talk about Brambles. If I had it, I'd hold it. If I didn't have it, I'd be waiting for a better price to buy it.
Okay.
NEC, I don't have anything good to say about this. I like positive trends. I like money coming into a stock because the smart money's done their research. There's no better alternative than this, and therefore demand is greater than supply, prices go up. It's the exact opposite of that, and therefore I would avoid it like the plague.
Okay, what do you think about Medibank Private?
Yep. Look, Medibank's certainly better than 9 in that it's not plummeting, but it's lacking a little bit of momentum, so it's not knocking my socks off in terms of everybody's trying to be in this stock at this point in time. It's not terrible by any stretch of the imagination, it's just not one that's coming up on any of my systems at this point in time.
Okay. I know enough about Stan Weinstein to know that he's a big man on sectors.
Yep.
He likes the sectors that are performing, as you were saying before, the stocks that are performing better than, or relative to the index generally, but he also likes the sectors that are performing better than the index.
Yeah, look, I mean, Stan was around when, computers had, 128 kilobytes worth of memory. So it made a lot of sense.
And that was if you were in a really modern office.
Yeah, well, absolutely. I mean, absolutely. Look, in 1988, I had a Commodore 64.
Me too.
So it had 64 kilobytes of memory. So it made a lot of sense in those times to be top down. because there were a lot of stocks and it took a lot of time to look at all those stocks. So if you started from the top, you said, look, given what's going on in the world right now, which sectors are likely to fare best? It's this sector here. Well, that cuts it down by 90%, and I'll start looking here. In these days, I've got this wonderful i7 chip thing that clocks 3.84 billion gigahertz per second. And I can get through all of the stocks on the ASX and all of the stocks in the USA in about 45 seconds. And so you don't need to be top-down, you can be bottom-up. I'm absolutely 100% with Andrew there. I'm a bottom-up investor, which means I look for stocks. I want to find a nice chart, and behind that chart, a nice business. It's just, I don't think there was a question there from Andrew for me, but that's more of a philosophical, my philosophical.
Okay, and any particular stocks, there couple of stocks for Andrew to maybe go and have a look at?
It's pretty slim pickings at the moment. We've got about 13 stocks on our watch list, our hit list at the moment. Many of them we're obviously invested in. So when I say a stock here, it's we be aware that we probably hold this stock. Data 3 is probably one of my favourites at the moment. It's very much in that software space, cloud solutions as well. Double-digit earnings growth is a must for me. I pretty much won't buy a stock unless it's growing its earnings by double digits. Which is gold in this market, because again, that crowding effect, everybody wants that too. The best investors want that, and it makes stocks go up. It's reasonably priced. That's the other thing. There's no point having something that's growing at 30% per annum if it's trading at 200 times earnings. Because somebody's already picked that opportunity out. So
okay, well, you've given a few pieces of gold there tonight, so thank you for that. Now we'll go to Brian. Brian, thanks for waiting patiently on the line there. How can we help you tonight?
Oh, thanks for taking my call. Love the show.
Great.
Just the panel's view on just a couple of stocks. One is Select Harvests, SHV's the code. And the other one I'd like to get an opinion on is Mantra, MTR. If they could help me with those two.
No problems. Thank you, Brian. Carl, either of those two that you like?
Yeah, look, I definitely like Select Harvests. It's more of a turnaround play. So, there's two... Imagine a chart, there's two general types of charts you're going to have. There's one that's bottom left, top right, that I'm interested in, and one that's a bit more of a U-shape or a V-shape. Both of them obviously towards the right-hand side heading up. This is the latter, so it's more of what I call a turnaround play. So straight away the risks are increased compared to something that's in a nice trend. Having said that, it meets all the criteria for our main system. It flagged a buy about a week ago because of its recent strong performance. It's doing well against the broader market. In terms of the overall trend, it is obviously a short, medium term, and now just becoming a long-term uptrend. That's why it's flagged a buy signal. In terms of the efficiency of the trend, it's quite good. So on its up days, it does well. On its down days, it doesn't do that poorly at all either. So so you get...
Which means the buyers are working the stock hard on
they're sticky buys. They're sitting on the bid on the bad days for the market where everybody's selling other stocks. That latent demand of the system is soaking up supply, and you don't get that downward price movement, so that's pretty important. So it's a bit more of a higher risk buy for me. I'd prefer to be buying it with a little bit of momentum through $8. I wouldn't just run out and just buy it here. I'd actually like to see it pushing through that $8 level, because that's a bit of a key level at this point in time. Mantra, I'm less enthusiastic on. It's I'm always about right stock at the right time. I just don't think it's the right time on that one just yet. It's kind of the opposite type of chart to Select, where you've got these really steady, you can see on the chart there on screen, lower long-term peaks, long-term troughs, and I would prefer to just stay away from that one at this point in time. So look, if I had it, dare I say, I'd want to be out of it, because I don't think this is going to be the best stock over the next 12 months. And I want to chase that best stock over the next 12 months. So if I had it, I'd get out right now and go and look at one of those better stocks. If I didn't have it, I'd avoid it.
Okay, we'll go on to our next caller. We have Simon. Simon's calling from Sydney. Simon's got a great sounding business to ask a question about. Looking at the screen there. How can we help you, Simon? Yeah.
Hi, gentlemen. Have you heard of Fastbrick Robotics, SBR?
I haven't heard of it, but it just sounds fantastic.
Yeah, they've been newly listed. They've had some announcements recently, which I haven't really read into, but spiked up a bit. But the other stock is Isentia Group, ISD.
Yes.
Bought into that recently as well. I hear it's a good company, but price has come down a fair bit over the last 9 to 12 months. Any insight in those two companies would be great. Thank you very much.
Great. Thanks, Simon. Thanks for your question. Now, you do your homework on any startup.
Absolutely.
Sounds like...
On any company, full stop, but
Yeah,
especially a startup.
Especially a startup,
Definitely.
yeah, to look at those, how long it's going to take them to bring the product to market. And, of course, how long is a piece of string? It's very hard to know that anyway, isn't it?
Yep.
Yeah, Carl, do you like either of those businesses?
Look, on Fastbrick, the chart's fairly reflective of what Andrew said. Sideways to up. If you really squint, maybe there's a bit of an uptrend. Maybe there's a bit of accumulation coming into it. Look, it could be a 100-bagger for all I know, but right now it's not something that the system is saying it wants to participate in.
It looks very thinly traded.
It is thinly traded. It's very choppy. It's just not meeting the criteria. So it might be the best stock in 10 years' time. I might regret this decision to say I won't be investing in this anytime soon. And
so that's a Randwick alternative, is it?
Well, no, look,
go down to Randwick
look, if you are going to punt, and I don't mind having a punt. Whether it's 10% of your portfolio or 5% or whatever it is, right? I've got no problem with it. So I'm not one of those, fuddy-duddy people that get up on this show and say never buy anything that's speculative. And I'm the opposite. If it's going up, I want to own it. So this isn't going up though. So I think in the speculative space, there's better opportunities out there. And your biggest enemy, as you guys are saying, is not whether the product is taken up. Your biggest enemy is just the fact you don't make any money and you've got costs. And eventually you're going to get diluted. It's the oldest story. I'm from Perth, right? So I've owned about 10 billion mining stocks where I've been diluted over the years. So look, it's a pass for me. ISD, it's a funny one. You look at the business and all the numbers check out. I think it probably got a bit expensive for someone. It's got great growth, but it got a bit expensive. And then one of the funds said, hey, you know what, we've made some good money on this one. Let's get out. And their selling was a bit more than the other people's buying, and you get this loss of momentum. And I just don't think you want to be in the stock until it shows the momentum that it's back to a level which is looking attractive to the big money again, and then they start to pile back into it. So that's a pass for me as well.
Okay, well, there you go. I think we now have another caller. We've got Elizabeth. Elizabeth is calling from New South Wales. How can we help you tonight, Elizabeth?
Yes, look, I'm just wanting to know your opinion on Estia Health.
Estia Health, okay.
Yes, I've got a bit of an idea of where you think it might be going and whether to hold it or not.
Okay, and Elizabeth, were you in the stock at the float?
No.
No, okay, good. Thank you very much for that question. And what's your view at the moment there, Carl? Looks pretty ugly, the actual downtrend there still.
I think I'm going to be a little bit predictable here on that chart and say that it's not one for me. It's definitely not coming up on the models as a buy. It's not the worst one I've seen. You look at some of the dynamics within the trend, so it tends to rise. It's a funny one. It tends to rise during a trading session more often than it doesn't. The falls are coming from large, sharp, concentrated falls.
Right.
Otherwise, it's actually not so bad. So
there might be some very,
it's being supported.
Very
It's been picked up by somebody. It's just way too early for me to tell whether it's the start of something fantastic or it's just ebb and flow of the market. So I'm definitely staying on the sideline.
We'll go straight to Charlie. Charlie's calling from Melbourne. What's your question tonight, Charlie?
Oh, thanks. My question is FIR.
FAR, yes.
Yes, and VRC.
VRC.
Well, what do you think about the shares, if I should keep them? Because they tell me they find a lot of oil, West Australian.
Yes.
And they jumped to 15 cents, but now they just keep going down. I don't know why.
Okay, so FAR and VRC. Good, thank you, Charlie. We'll go, I think, probably to you on this one, I think, Carl,
sure.
In terms of the technicals, because they're pretty small companies, I think, those two.
Look, FAR doesn't make any money. Now, this stock has been...
stay far away?
It's been around for a hell of a long time, and... I've followed it on and off over the years, and it's had its moments, but it's been around for so long and it's still not making any money. What does that tell you?
I bet you the share count's gone up.
Well, I'm sure there's a few more shares in issue today.
Number of shares.
Look, I'm all about track record. The technical analysis is the study of track record, and it doesn't look like the track record from a business perspective is very good here, and the chart simply reflects that. The charts and the business, the quality of the business, they do come together, I believe, and I would definitely not be putting my money or my clients' money on FAR.
And this is in the oil sector, is it? Or?
It is, yeah. It's an energy oil and gas producer. I think they do have some production, but they still can't make money out of it, which is a real concern. So, look, apologies. I know everybody wants to call up and hear the panellists gush about their share and tell them how wonderful it is, but, this is not the best stock out there, and I would not own it. The other one is VRC. And I must admit, I haven't heard about that one. Look, it looks better than the other one. In that the trend is far more prominently up. However, over the last few months, it has taken a pretty significant turn for the worse. And I think it's lost enough momentum for me to say that it could take months and months and months of waiting before this starts to show any signs that it's going to go back up. So I think the smart money that knew about this before you knew about it is well out of it by now, and it's just you holding on. I'm sorry to say that. And I think there's better things you can do with this money as well.
Okay, thank you, Carl. Andrew, I probably won't even go to you on this one.
Sell.
Okay, next. Okay, now, and I guess the other thing with both these stocks, if they're both in the oil and gas sector, it's they're not getting any free kicks out of the oil price either.
Absolutely not.
Yeah. Now, we've got an email to go to. Carly asks, I've jumped from A2 milk. I'm very happy with the profit and expecting a step back as people consolidate in the name. Would the panel buy Blackmores, BKL, at $150 or some CBA for dividend growth and safety? Now, very quick one, Carl, on Blackmores.
No for me on Blackmores, and I share the same concerns. Surely the Emperor's going to realise he's not wearing new clothes pretty soon. Bellamy's would be my pick in that sector, although there are 13 stocks ahead of Bellamy's that I'd like. Just on the banks, people love banks in Australia because of their fantastic dividends, but there are so many better businesses out there with even better dividends. I could reel them off or go to the website.
Now, people, just give us quickly what your website is if people want to go and have a look at some of your research.
Very simple, www.investorsystems.com.
Fantastic. That's all we have time for today. Thanks so much to our guests, Andrew Page from Motley Fool and Carl Capolingua. I finally got it, Carl, from Investor Systems. And to you, our viewers, for all your calls and your emails. Until next time, I'm Ken Bloomfield from Financial Clarity. Thanks for your company.
The information featured in this program is general in nature and therefore should not be relied upon. Guests appearing on the program may have commercial arrangements with some of the companies mentioned. Before making any investment, insurance or financial planning decisions, you should consult a licensed professional who can advise whether your decision is appropriate for you.